All right, so it's been a while, and I have a ton of updates for you guys regarding OPENDOOR, regarding HIMS, regarding BIGC, regarding earnings that's coming up. We've got a ton of earnings, okay? So I'll be giving you the earnings dates because you know we love to live stream the earnings call on my channel. So we will be doing that for the month of February. Now, before we get into that, I just want to say that I appreciate the 90% of you guys that watch my videos, that are continuously supportive, showing love in the comments. You guys are incredible, okay? But it's been a tough scene, okay? The YouTube stock investing scene has been very, very tough, okay? Ever since Meet Kevin capitulated, there seems to have been a lot of distrust amongst the YouTube community, from you guys, the audience, and also us being the creators. But I do want to make this very clear. Meet Kevin doesn't speak for me, okay? I don't know about anyone else, but I can assure you guys that Meet Kevin doesn't speak for me. I personally think it's a complete waste of time trying to guess what the Fed will do, trying to guess what the interest rates will be, the interest rate hikes, to try and guess what the inflation numbers will be. I don't care about any of that, okay? All I care about are the companies that I've invested in, right? As long as they continue to execute, I will continue to hold, okay? That's all I care about. I'll only care about the fundamentals and the financials of the businesses that I've invested in. I'm in this game for the long term. I'm not looking to sell out all because I think, Jerome Powell will do something or say something. I could really care less. I mean, I think it's a good idea to keep on top of it, to know what is going on. But in terms of it influencing my investing decisions, that is a complete waste of time. And many great investors have said the same thing. Peter Lynch said, right, if you spend 13 minutes worrying about the macroeconomics, worrying about the Fed, you have wasted 11 minutes. Okay, that's pretty much what Peter Lynch has said. So if Peter Lynch is telling you not to worry about it, why are we then worrying about it? It makes absolutely no sense. And even right here, okay, so this is from the book that I'm currently reading, Only the Best Will Do, by Peter Siller. And he says here that the biggest risk an investor with a long-term perspective faces is not whether the price of his shares is marked up or down tomorrow, but whether the fundamentals of the company are improving or deteriorating this year, next, and the one beyond. That's all I care about. Honestly, guys, that's all I care about. That's the only thing that's keeping me invested in the markets, and that's what gets me excited, knowing that I've made an investment in this company that I believe will do X, Y, Z in the future. And when they do execute on that thesis that I built up initially, that's extremely rewarding. And I know over the long term, the stock price will do well as long as the companies behind them continue to do well. Nothing more, nothing less, as Benjamin Graham has said. Okay, so Meet Kevin does not speak for me. I'm in this bear market just as much as you are, and I'm taking advantage of the companies that continue to execute by owning more of the company. For me, this is not capitulation stage. For me, this is accumulation stage, okay? So for all of the people who have left negative comments accusing me of also selling out but not saying it or not being transparent, that's just simply not the case, all right? So with that said, let's just dive into it. So first up, we have news regarding the iBuyer market, okay? So you guys know my largest position is OPENDOOR, and I have been buying OPENDOOR, especially when it was at $8 recently. I have continued to increase my ownership of this fantastic business. Now, we've got an updated report from Michael Dupree, who is a specialist in real estate, specifically with iBuying. And he gave us a report of regards to 2021, saying that iBuyer market shares soared in 2021, okay? So according to his research, 2021 was a transformative and record-breaking year for iBuyers. More houses were bought and sold by iBuyers than ever before. And this is exactly what my long-term thesis for investing in OPENDOOR and OfferPad is pretty much based on. I believe their products and their services is disrupting the real estate industry. The real estate industry is ripe for disruption, in my opinion. And as you can see, the proof is in the numbers, okay? Customers absolutely love this product. And as a result, more customers continue to buy and sell through these iBuyers, all right? So I've highlighted the main key points because I don't want to just read through the whole article, but it says here, the iBuyers national market share of home purchases hit an all-time high of 1.3%, so around 70,000 houses in 2021. Now you have to remember the real estate industry, the US real estate market is a $3 trillion market, okay? And all the iBuyers combined only took 1.3% of that market. Remember, in previous OPENDOOR videos, I presented you guys with the blueprint, okay? OPENDOOR planned to acquire 4%, right, of the entire real estate market share. at least in the short term, and that will put OpenDoor at a revenue run rate of about $50 billion. Okay, so right now the whole entire market is at 1.3%, and of course, with Zillow exiting from this space, it pretty much leaves the door open for OpenDoor and OfferPad to gain a monopoly on this market, which continues to demonstrate increasing demand from customers. Okay, seasonality kicked in for OpenDoor as it smartly slowed purchases after a massive acquisition spree in Q3. Okay, so Kerry Wheeler in the Q3 earnings call made it very clear that over Q4 they're going to slow their purchases because the markets are genuinely slower over that period. So there's no point making huge purchases and just have that inventory sat on a balance sheet. It made no sense. So smartly, OpenDoor slowed their purchases, and this for me was the key takeaway. Okay, so iBuyer sales set a new record in Q4. Remember, Q4 is meant to be the slow season. However, their sales hit a new record with more houses sold than ever before. This is meant to be a slow season. However, the iBuyers set a brand new record in terms of the amount of houses sold. That's insane. That is insane. OpenDoor consistently sold more houses each month, demonstrating an expanding operational capacity to repair and sell houses at scale. This is one of the main bear arguments that I see online, is that, OpenDoor can't buy and sell at scale. They're doing it. They are doing it. You see it right here. So the bear arguments are just based out of pure ignorance and people just not wanting to accept the facts. Okay, the fact that OpenDoor are doing it, they don't want to hear it. It's not possible. They've already made up their mind. You see a lot of bears saying that if Zillow can't do it, OpenDoor can't do it, or no one else can. Well, OpenDoor are doing it. Okay, so this is a critical metrics to watch. Buying houses is comparatively the easy part. Selling at scale is difficult. Okay, that's a fact. So the author asks what's next, and to be honest, I agree with his points. 2022 is all about profitability. OpenDoor and OfferPad needs to demonstrate that they can achieve consistently positive unit economics at scale. Okay, with Zillow out of the picture, there will be less competitive pressure on fees and acquisition prices, and this is what bears also forget. And I tweeted this a couple of days ago. The argument from skeptics and bears who only refer to Open as a home flipper stems from a place of poor due diligence on their part and spreading misinformation. OpenDoor is a payments company generating a 5% fee from home transactions. HPA on the resale are bonuses, okay? And that's facts. So massive news for OpenDoor and OfferPad and pretty much the iBuyer market as a whole. In regards to OpenDoor, their earnings is on February the 24th, on market close of Thursday, February 24th, 2022. So there's a high possibility I'll be live streaming this earnings call. So make sure you put this in your diary. Okay, so next up is HIMS. With regards to HIMS, we had our Chief Operating Officer, Melissa Bird, on the company's retail strategy. Now, if you've been paying any attention to HIMS, you would know they've been crushing it, okay, with partnerships with Walgreens, Urban Outfitters, the Vitamin Shop. We also partnered with Uber to be able to provide an on-demand service for their customers. But essentially, we've been making a strong push towards wholesale, okay, the brick and mortar retail side of things. So she outlined the company's plans right here. The company entered yet into another retail partnership just last week, this time with retail giant Walmart. The partnership will make Hims & Hers hair care offerings available to over 1,400 Walmart locations and on walmart.com. And Melissa said that Hims & Hers is looking for growth in the existing partners that we have. So deepening those partnerships with Target, Walgreens, Walmart, and all across our portfolio. We still have aspirations to expand into other retailers as well. So I look forward to continuing that growth and really being able to allow people to find us everywhere. Now, if you look at the most recent quarterly results, okay, I have it here. Online revenue has been absolutely going crazy, okay? Online revenue growth has exceeded my expectation, analyst expectations, and also the company's expectations. However, if you look at our wholesale revenue, it's pretty much been a laggard, okay? So in Q1, we only had 1.6 million. In Q2, we realized 2.5 million. And in Q3, it actually decreased. We only saw sales of 2.1 million and from wholesale revenue. So Melissa is now saying that the company plans to push to drive wholesale revenue, which will contribute to the already growing online revenue that we're experiencing. And this detail is quite new because if you pay attention to some of Andrew's previous interviews, he has always mentioned that being positioned in retailers like Walgreens and Walmart are pretty much like billboards. His main target is growing the online revenue because, of course, that's recurring revenue. So that's fantastic and also has higher margins. However, I think that strategy has now evolved to whereby Melissa actually wants to grow the revenue that we're seeing in brick and mortar stores. And of course, that will contribute to our overall top line growth. So as a shareholder, I think this strategy makes sense because you're getting the best of both worlds. You know, you're in more retailers, so more customers get exposed to HIMS. And also that provides us with the opportunity to convert them into online customers and generating recurring revenue. So I do like Melissa's strategy here. With regards to earnings, we do have earnings on the 22nd, all right? So HIMS and Hers will be reporting their Q4 and full year 2021 results, and it will also be at market close. So I will most likely also be streaming that. HIMS is one of my highest conviction investments. It's in my top 5 largest holdings. So yeah, I will most likely be streaming it. So it's looking like perhaps I'm going to need to take the week off to get through these earnings with you guys, but I'll keep you guys posted. Now, another one of my core holdings is BigCommerce. Ticker symbol is BIGC, and they've released some amazing news recently, including that they've now partnered with Tottenham Hotspurs. Now, I have to admit, as an ex-Arsenal supporter, this did kind of rub me up the wrong way. However, hey, look, if this is just the beginning of BigCommerce getting into Premier League companies, becoming their online store and online merchant, and also to power international growth, as it says here, if Tottenham Hotspurs is just the beginning, then imagine if they can get Man United, or if they can get Chelsea, or if they can get even Arsenal or Liverpool, one of the major football clubs. It's huge, okay? This is one of the main reasons why I prefer BigCommerce over Shopify. BigCommerce seem to be able to attract these large merchants, okay? Their platforms are purposely built to attract large corporations, large merchants like Tottenham Hotspurs, in comparison to Shopify, where they attract more of the smaller merchants, you know, your mom and pop type businesses, etc. That's Shopify's primary customer base. This is what they had to say. BigCommerce's leading open SaaS approach was a deciding factor for us. Their flexible e-commerce platform, combined with their curated ecosystem of integration partners, creates endless opportunities for us to modernize our online store, offer amazing features for our fans, and support our continued growth throughout the world. And I think if management can really crush this partnership, I think it's only a matter of time before BigCommerce starts to announce more Premier League companies and maybe expanding into Europe and attracting some of the big name football clubs in Europe, maybe Barcelona, maybe Real Madrid. And on that topic of potentially expanding further into Europe, BigCommerce launches in Germany, Mexico, and Spain, empowering merchants to build and grow innovative online businesses. So don't be surprised, okay? This is only their most recent expansion. They have already successfully launched in the likes of France, Italy, Netherlands. This is Big C's official entry into Latin America. So really and truly, the runway for growth and expansion for Big C is huge, in my opinion. Absolutely huge. And like the others, it will also be reported after market close on Monday, February the 28th. I can tell you now, I won't be live streaming this, but I will be giving a full breakdown for my Discord members. So if you're not in my Discord and if you want to join, the Patreon link is in the description below. Check us out. Now, some of you guys have been asking me, am I still holding Tattooed Chef? Of course, but I haven't made any videos or anything regarding Tattooed Chef because they've given us nothing. You know, looking on the news release page of their website, absolutely nothing. Their last report was before Christmas, okay? We're now in February. We don't even have information with regards to when Q4 will be. There's been absolutely no news from the company. It's slightly worrying. The fact that we haven't heard anything for over a month now, coming up to 2 months, it is slightly worrying. But I've not sold a single share. Also, I have not purchased a single share. For me, Tattooed Chef is not a buy or a sell. For me, Tattooed Chef remains a strong hold, okay? And that's exactly what I'm doing. Now, quick update regarding other positions that we've invested in. Corsair earnings is on the 8th. Airbnb earnings is on the 15th. However, we're still awaiting earnings confirmation and dates from Palantir, Beyond Meat. I'm not invested in Beyond Meat just yet, but it's a strong candidate for adding to my portfolio. But I do want to see Q4. Tattooed Chef, of course, Celsius Holdings and others as well haven't given us a date just yet. So those are the updates that I have for you right now. If you did get any value, please make sure you smash that like button. If you're new to the channel, hit that subscribe button. And if you want to join my Discord group, the Patreon link is in the description below. Check us out. With that said, I should be able to return back to my scheduled uploads of 3 videos minimum a week. I let last week just fizzle out, you know, let everybody's temperature calm down. And I think it's safe to come outside now, as the saying goes. So thank you so much for watching, and I'll catch you in the next one. Peace. guys.